Yeah, so let's get started. Okay. So welcome back guys to another weekly webinar and a very happy Easter to all of us, especially to our Christian brothers and sisters. So we dive right into what we have for today, and you guys know how we do that. I will first of all look at the economic calendar. So we'll visit our website at godocm.com. We look at our economic calendar and so starting from Monday, Monday is expected to be slow in terms of the holiday, but I don't think so. That's going to be slow based on the holidays. I think we could see some sort of geopolitical move, especially coming from the Middle East. With just less than 48 hours to Donald Trump ultimatum of, to the Iranian regime to either make a deal or all hell will be let loose. And that was his exact words, few hours ago, about 1 or 2, 3 hours ago, on Truth Social, he tweeted. So regardless of the Easter Monday, because probably we may not have a deal, okay, and most likely, if there is a continuous escalation, we are going to be seeing crude oil prices pushing more up, and if we are not seeing any sort of de-escalation, gold may continue its move to the downside. But if nothing at all, we could see gold maybe gradually, crawling to the upside, starting from now. But if that doesn't happen, no deal, we could see gold push back to the downside again, breaking the current lows. When you look at maybe the 4 hourly chart. So we'll start with the economic calendars. On Monday, Monday is Easter Monday. No high impact data we're expecting on Monday. But on the 7th of April, Tuesday, we'll be getting PMI data from Australia and commodity prices index as well from Australia, an important indicator for inflation. And that same Tuesday, we're also going to be having PMI data from the United Kingdom, France, Germany, Italy as well. So as we head forward to 8th of April on Wednesday, we're going to be having RBNZ interest rate decision. That's the interest rate decision from the Reserve Bank of New Zealand. Okay, and unemployment rates from Switzerland on that same Wednesday. PMI data, construction PMI from Germany, France, and Italy, and as well for the EU. And we're also going to be having retail sales data and PPI data, very important inflationary data for, for the EU as well. Okay. And as we head down to 9th of April on Thursday, we're going to be having PPI from Norway in case you take the Norwegian krone, which has been slightly strong, since the start of the war, because Norway is a major oil producing nation. So we also have core PCE data from the United States. Core PCE or PCE data, personal consumption expenditure, a preferred gauge for the Federal Reserve, for inflation. So it's a very important one for traders to keep an eye on as well. We'll have initial jobless claims for the United States as well. And on Friday, we'll have CPI data and PPI data coming from China, and CPI data coming from Norway. Um, ECB Vice President is also going to be speaking, so it's always good as well to try and listen to him to get the forward guidance. Especially now we're having uncertainties, which is affecting more Europe. Today I was watching through Bloomberg and across their site and also on their live shows on YouTube and seeing the graph of nations that are most impacted by the energy crisis. caused by the war in the Middle East, France is number one, followed by the United Kingdom. So this gives us a kind of, if we see heightened escalation, okay, how, currencies are going to be affected, and not just currencies as well, even equities as well. So you're expecting, European equities to also suffer a lot, all right, especially coming from France, the United Kingdom, okay, and Germany as well. But France and United Kingdom are, suffering a whole lot in terms of, the energy crisis. So that's the only they will have employment change data from Canada and also core CPI data, by 1:30 p.m. Nigerian time for the United States. A very important data and gauge of inflation as well. But for the Federal Reserve, their most preferred, like I said, is the core PCE. Okay, so have that at the back of your mind. So that is it, guys. And remember, after looking at the economic calendar, the next thing we look at, we try to look at macro data, to understand which currencies are expected to be strong, which was expected to be weak. We also combine that with sentiment and have an overall bias, and also discuss a little bit about geopolitics to see how geopolitical events could possibly play out. What is happening? If you have been on the news, you'll be hearing about Iran possibly shooting down two US fighter jets, an F-15E and a US A-10 fighter jet. For the F-15E, which carries two pilots, the pilot successfully ejected, and um, one of the pilots have been rescued, but there is a search currently ongoing for the second pilot, and that could possibly, lead to a possible ground invasion. All right, because with a US pilot, definitely US is definitely going to come to rescue. So with the US pilot and now Iran may be trying to have a ground search to capture the pilot. So that could possibly lead to a ground invasion. So that is the direction of escalation, trying to unfold if care is not taken. If let's say the US forces don't rescue the pilot on time, that was since yesterday, and maybe there's a capture by the Iranian forces. So let's see how that plays out. Okay. So looking at our macro data, now what we have in terms of bullish currencies, I have a AUD, USD, Euro, and on the bearish side I have GBP, Swiss, and CAD. And you know how we do this. First of all, look at AU, the first one, then I guess the last one, second to the last, and third to the last. So looking at these, we look at the AUD card, and what is sentiment saying about AUD card? So for AUD card, we can see we are positively heading to the upside after a decline last week. We're now moving from 9 to 47, and with this possible escalation in geopolitics, not just types of data, you know, Australia is a major LNG exporter, and not just crude oil prices are affected, even the liquefied natural gas. Okay, and AUD is benefiting from that. That's why I always say context matters in terms of fundamentals and geopolitics. So AUD is expected to gain from that. You may not maybe see a whole lot of strength, in terms of AUD card. Regardless, I expect that strength, even though Canadian dollar is also a major oil exporting nation. But now, when you look at some points that are bullish for that particular currency, both currencies are going to be benefiting from the tension. But now, when you add things like macroeconomic data as well, with what we can see on our scorecard, you also see that AUD card is expected to outweigh AUD is expected to outweigh Canadian dollar, and that is what we can also see in terms of sentiment from institutional positions. Okay, so we will now go to the charts. Okay, let's look at for AUD card. Okay, not added that on my watch list. AUD card. So for AUD card, we can see what AUD card is actually giving us right here. So AUD card is actually probably setting up for a buying opportunity. And if we go to the 1 hour time frame, so what is AUD card trying to do? So for AUD card, any further push to the downside corrective structure is going to be giving us an opportunity to the upside. Okay, to take away this high. So after that, if we get a push to the downside, another up move will be coming. So for AUD card, all I'm looking at for is an opportunity to the upside. Any corrective structure upside will be coming for AUD card. Okay. So we'll go on to the next one, which is AUD Swiss. And Switzerland is also one of those currencies countries that are also suffering from energy shock. I think maybe around third to fifth country suffering most from the energy you know crisis in EU, Europe, basically. So when we look at sentiment and look at what AUD Swiss is expected to do. So there is a little bit of decline in terms of sentiment, institutional positions, but personally, I'm still going to be very bullish on AUD Swiss as well. You know, uh, so let's go to AUD Swiss and let's open the chart. So good. So for AUD Swiss, any corrective structure as well is going to be leading for a push to the upside. Okay, what we have gotten here is impulse, correction, impulse. So once this corrective structure is done, price is expected to push back to the upside. A lot of liquidity seems to be hanging around this high, even currently above this high. So price could even go as high as taking away this high once this corrective structure is done. Let's look at probably around this region. Okay, around this area could be, the turning point zone. This is not a signal, it's just an analysis, to show you guys that, to help you be on the right side of the market. Okay. The next one we have is AUD against GBP. So that's giving us a GBP AUD. So in terms of sentiment as well, what do we have? So we are going from 3 to 1, still on the positive side, but a decline. Okay. So for GBP AUD, what are we having on the chart? So that means it's a bearish one. So let's look for, okay, take one on the chart. So GBP AUD. So for GBP AUD, we are looking for sales, and the price has already started, that bearish move. So for GBP AUD, any corrective structure is an opportunity to give us a move to the upside. Price may give us a push down, upside again before the next downside. Any of the above or anything happens, I'm not interested in the in the buy setup. Rather, what I'm looking for is a sell opportunity. So either a small corrective structure continues push the downside, or a push back up and then downside again. So in other words, all I'm looking at for on GPAUD is a push to the downside. Okay. So move on to the next one, which is USD card. USD card. Last week, this is one of the currencies I shared there last week. And market is unfolding exactly what we said last week. If you look at what we discussed in terms of USD card, maybe I will try and okay, let me try going to Godo. Let me go to our YouTube handle. So hope everybody subscribe to our YouTube handle. So if I try to go back there, let's go to the last video we uploaded on USD card. So that was a very good one. So what we forecasted for USD card. So let's try getting it so you can watch for yourself. So hope you can see. Okay, these are USD Swiss, sorry. So USD card. So you could see what we're expecting is a corrective structure, and that is actually unfolding right now. So you can see if you're actually following our analysis, and everything, Godo is helping you to stay on the right side of the market. And if I go to USD card right now, you see what the USD card is actually doing. USD card is actually following. You can see that from there. You can see. So that is exactly what we are, having in the USD card. And after that, price after this push a downside correction here, downside, something similar to this. Price will give us an opportunity back to the upside. So for USD card, I'm looking for a bullish opportunity into the new week. So what is sentiment saying in terms of that? So you can see we are from positive 4. We went from 102 down to positive 4. That gave me that clue that okay, possibly we could be having some sort of pullback and corrective structure of the downside, and then after that we could continue because fundamentals and macro, everything is still in support of that bullish move. And now we could start seeing that uptrend continuing again, probably for the fifth wave of the wave 3. What do I mean by fifth wave? This is first impulse 1, 2, 3. So this one forming is potential fall, and then the last one over the third leg of the wave 3 rather. Because on a bigger degree, those who understand wave analysis very well, on a bigger degree, this year is impulse correction. All this is probably going to be an impulse. So this is a wave 1, wave 2, a wave 3. So this, what I mean is, this is potentially going to be what I'm looking at to trade for is the fifth wave of the wave 3. Okay. So that is it for USD card. So you guys can see that folding clearly. So the next one I have is USD Swiss. So let's look at sentiment. So for sentiment, USD Swiss is gradually pushing negative, not in favor of the direction we want. So -5. So we may see a slow one, in USD Swiss, but I'm still anticipating that continuous push to the upside. So if you also go to what we discussed last week, we also made mention of this push down and on USD Swiss. Okay, we made mention of this push down on USD Swiss. So let me try. So you can see we also made mention of this push down on USD Swiss, and after that, we also anticipating a push to the upside for USD Swiss. And if you go there, you will see that's actually unfolding. Okay, so you could see it's not magic, it's information and knowledge. Anything is actually possible, when you trade with the right information and more especially with the right platform. Okay. So we'll go to the Excel sheet again. And the next one we have is USD pound, which gives us pound USD. So what do we have on in terms of sentiment? So in terms of sentiment, we are gradually growing, bullish from 8 to positive 11. Okay, in terms of positional play, very slight increase, but I'm still not going to buy it because fundamentals is not in favor of that. I discussed a whole lot of things in terms of you know, uh, the policy divergence, and not just that, even how inflation, the energy shock is affecting the United Kingdom. I've already discussed that. So I'm only looking for a push to the downside. So what am I looking at for in GBP USD? So if we can get either a corrective structure, one more drop is going to be coming, or maybe a push to the upside, one more drop is going to be coming. All I'm looking for is a sell setup, probably to take away this low. Okay, this low is meant to be taken out. That is what I'm looking out for on GBP USD. Sell setups. Okay. So the next one we have is euro. So we look at euro card. So euro card is also one of those currencies we called out last week. Which did exactly of what we are forecasting and anticipating. So if we look at for the sentiment in euro card, so we could see euro card went from -1 and now is at 34. So, but if you look at euro card last, you can see from 12 to -1, but fundamental. So even sentiment, maybe the positional play of institution But macro forces are the number one thing. We just combine sentiment, to be, kind of an added layer. All right. But the number one thing I always have in mind is the macro play. Okay. So if we look at Eurocard last week, um, so we're anticipating a bullish move on Eurocard, and that is what I'm still looking at for this week. That bullish play, the bullish move I'm anticipating on Eurocard this week is probably going to be a very small one. And with what I'm seeing in terms of the structure, if there is no deal between US and Iran, I think what is going to be fueling the next move in Eurocard, the next wave in Eurocard, is not going to be in terms of macro data, but is now going to be more of the energy crisis on in terms of what is going to be causing. Okay, because Europe is going to be suffering a whole lot. Okay, and if you are following the war very well, Iran is not, winning militarily, all right? They are actually, fighting an economic war, trying to shut down the global economy. And Europe is one of those, places that is affected the most with Asia as well, because they are heavily dependent on crude oil importation. Okay? So for Eurocard, what am I anticipating? A push to the upside to take away this high first, all right? Maybe when the market open, let's say maybe Monday, I will be expecting a move to the upside, to take away this high. Okay, after that, then we'll see what happens. I'm not going to be going for the sell, but the sell is what is expected to happen. Unless maybe we see, some sort of you know, uh, attack on probably Iranian energy infrastructure. Because if that happens, 90 million the Iranians are going to be staying and living in darkness if that happens, because that is what Trump is saying is going to be, attacking. Okay, so let's see how that happens, and that is definitely going to be fueling, crude oil prices to the upside, and then crude oil exporting nations, their currencies are definitely going to be benefiting from that move as well. But for now, I'm only looking for a move to the upside, which is supported by structure and everything. Okay. So that is it for Eurocard. And if you go to what we discussed last week on Eurocard, we are talking about this push to the upside. And if we go to Eurocard, we are going to see that. Let me try, going for Eurocard. Go. So this is Eurocard. So you can see this is on the 4-hour time frame where we are discussing that. So if I go back to the charts right now, on Eurocard 4 hour, so you will definitely see that. So you could see that. Okay. Boom. So this is knowledge, it's information, and like I said, trading with the right platform. So you can see how everything is unfolding. Okay. So that is it for Eurocard. So let's go on to the next one we have, which is Euro Swiss. So for Euro Swiss, which we are bullish as well as of last week, Euro Swiss, we went from negative 51 to positive 2, and now we are back to the negative 33 at 9. But I'm still very much bullish on Euro Swiss. So for Euro Swiss, we are looking for a buying opportunity last week, and I couldn't get in touch with that, but the move was very massive. If you go on to what we have here, so you can see based on what we have here, this is what we are discussing. A small corrective structure, one more push to the upside. And that is exactly what we got if we go to 4 hours. So you could see that's exactly what we got. Push to the upside. Okay. It's not magic, you are seeing it unfold just in front of you. So for Euro Swiss, I'm going to be leaving Euro Swiss for now because a whole lot of moves is happening in terms of the structure. Okay, let me see what happens. I'm definitely going to be allowing this structure to be over. I know this is trying to be a corrective structure for a potential move to downside again. So I'm going to be leaving it out for today, for the next week rather, and focus on the other page and allow the waves to unfold, all right, and maybe see more fundamental forces that's going to be fueling the next moves for Euro Swiss. Okay, and the next one I have is Euro Pound, Euro GBP. Okay, a very good one I'm looking at for the week. So, and moving pretty well. I couldn't catch the last one, which we are bullish last week. I couldn't catch the move, but I believe the next one this week, I'm going to be getting it. Okay. So what I'm looking at for is with five of this entire structure here. So here we are getting impulse correction. So impulse, the next corrective structure here, what I'm looking at for is with the next opportunity, the upside to take away these eyes for Euro Pound, Euro GBP. And if you take a look at sentiment to see what sentiments are saying for Euro GBP, so we are moving from negative 15, still on the negative side, but a little bit of relief, just one, all right, or maybe less than one, because this is negative 15.2 as against negative 14.7. But I'm still heavily bullish on Euro GBP. Yeah, these are two currencies that are suffering, the EU, and because of this geopolitical crisis. But when you add other things as well, the macro play and all of that, you still see Euro probably outplaying, the pound. Earlier on, the pound was a bit outplaying the euro, but when a lot of factors begin to hit the pound, we began to see, these, recovery, but because during times of energy crisis, Europe is meant to suffer more than the UK, but because of some other play that came up, Euro GBP began to, move back again to the upside. So so that is the last currency pair we have this week. But to add to it, let's look at two commodities we have. So let's look at crude oil and uh, gold. So for crude oil, sorry, anybody wants to say something? Okay, let's continue. So for crude oil, uh, what I'm anticipating for crude oil next is I don't mind. Technically, it's ready for a push to the downside. But personally, to me, I don't want to believe that, you know, till maybe if maybe there is a peace talk,
But meant
a de-escalation or anything. But fundamentally, we are still very bullish. But technically, I'm seeing, crude oil giving us a push to the downside. I don't know how far that could go. Maybe we may not take away this low, around 76. Maybe if we begin to hear hopes of de-escalation again, we may get a push to the downside. Probably maybe giving us a corrective structure. If the escalation, sorry, continue, we could see price pushing back to the upside again, breaking above $116 per barrel. But if that doesn't happen, because I know fundamentals, is definitely what influences the technical aspect of the market. So what I'm expecting for now is continuous upside, unless we see the escalatory statement, because geopolitics is definitely what is in play when it has to do with the energy market right now. And any forex trader who is not paying attention to crude oil is actually missing a lot. You're actually making a very big mistake. You are definitely trading blind this period, because crude oil is definitely what the market is actually looking at now. The central banks are looking at crude oil prices because that is inflationary, and that definitely affect their mandates and disrupt, whatever thing they have in their books, for the next 6 months, 1 year, and all of that. So if you're a trader, you're not looking at crude oil prices now, you are making a very big mistake, because crude oil is what is driving, every aspect of financial markets right now, right? From equities, from currencies, bonds, and everything. That is definitely what is causing flows in this, because of the war in Middle East. So, like I said, technically it's showing that anytime soon we will get in a push to the downside, but fundamentally we are not yet there. But technically we are there, okay? But I don't like to go just technically, because I understand what actually drives price, okay? So maybe technically, maybe if we push up, maybe we may get maybe a corrective structure or something similar to this nature again, and then push back up, that is it. But I'm not, anticipating, you know, any push to the downside fundamentally. But technically, it seems to be ready based on my technical strategy. But I'm not going to be going in blind, like I said, okay? So, and that also leads me to the same, I have a similar, kind of view when it comes to gold as well, okay? If the escalation continues, okay, we could see gold pushing back to the downside, taking away this low, going below 4,000. Okay, we could see that. But if maybe we begin to hear any sort of good news, de-escalation, peace talks, ceasefire, and all of that, gold will continue pushing to the upside. Okay, gold will be crawling back. But if that doesn't happen, it push to the downside again. It's coming. So for now, I just stay glued on geopolitics and fundamental, uh, stops going in the markets, and then just react if I have to trade gold. Just react, based on technically to know the next move to take. But my eye first is on the geopolitical stories before I can make my trading decisions on gold and the crude oil as well, like I told you. Okay, both of them are ready for the next big moves, but the next big move is going to be, determined by the next geopolitical stories moving into this new week. And this new week is going to be very, very important for traders and for the markets more especially because of the 48 hours ultimatum by Donald Trump. Let's see what happens. Okay. Possibly are we going to be having a grand invasion that's going to, prolong the war. Once you have a grand invasion, I don't think that war is going to be ended in a month or two. That's going to take very, very, very long. Okay. Because now the objective will now broaden for the US military or US administration. Okay. So that is it, guys. I don't know if anybody has any question. So if you have any question, please you can unmute yourself and ask. Okay. Hello, hello. Any question? Any question, please? We have a lot of people on this call. I expect some
Yeah,
question.
exactly. Simon, no question from you. I think Simon was asking something before.
Okay, Simon, if you have
Mr.
a if you have a question, please unmute yourself and ask. Hello. Okay.
Maybe in absence of questions, we.
Okay, I think somebody unmuted. I think Kenechukwu Ugwoke wants to ask a question. Please go on. I can't hear you. I can see your mic is moving, but you are not audible.
Good evening.
Okay. Good evening. Okay, good. I can hear you now.
My question is not related to anything you have said so far, Sha. I saw
Okay.
a video of a guy talking about how yields of currencies, how currencies tend to attract to yields. So I don't know
Okay.
if you can explain.
Okay, good. So I believe you are talking about bond yields. Yeah. So when we say bond flows, that is exactly what drives um, investment into a particular country, and that reflects on the currencies. Take, for example, if the Federal Reserve in America is expected to hike interest rate, investors are going to be probably going into bonds. All right. They are going to be going into bonds, and which is going to be making the yield. Sorry? Okay, they are going to be going into bonds. So bonds becomes attractive, and you see instruments like gold begin to fall. And when bonds are attractive, or which means money is flowing into an economy, that also influences the currency because before you purchase an asset in a particular nation, you need the currency. The FX market is like at the center of every transaction being done. Okay, so when you know you know investors are buying, into an economy, moving assets, especially bond when they expect higher interest. Currencies also benefit, as well. But when investors are moving out of an economy, all right, so they sell bonds, all right. So when they sell bonds, it means they are converting out of that particular currency of that economy, and that weakens that particular currency. And why do they do that? Because of potential or maybe expectation of lower interest rates. I don't know if that is understood.
Yeah, thank you.
Okay. So any other question, please? More question, please. More question.
Good evening, sir.
Sorry?
Hello, can you hear me, sir? Good evening, sir.
Yes, I can hear you. Good evening, brother.
Yeah, Simon.
Yeah, my own is not really a question, though. I just want to appreciate you for the good work that you have been doing, because
Okay,
I can
thank
see
you.
that since I've started following you on this Telegram concerning this class, I can see that the trading my trading psychology has changed, because the way you analyze the market and these Excel sheets that you normally give us during the week, I normally follow it, and I follow the rules. Then at the end of the day, now I will be profitable during the week. Though I'll be trading it on my demo account, because I said let me really try it to work out for me. So far that's really good. So just want to thank you very much. I really appreciate. Thank you, sir.
You're welcome. You're welcome. You're very much welcome. And I'm glad what we are doing has been, very much helpful to you. Okay. So I would like you to keep up the energy, keep on attending the webinar, invite your friends, those that are, like-minded individuals as well, to also help those traders. So don't enjoy the good things alone. So if you also have traders who are struggling, so also invite them to join the webinar. Okay, share the link with them anytime you get the link. Okay,
Okay, sir. Thank you, sir.
you're welcome. So do we have any other questions from any other person, or that is all for now? Okay. In the absence of no question, we're going to call it a day. So follow the geopolitical stories, trade carefully, fund your account. If you have not, reach out to your relationship manager or your account manager, to help you with that. It's a very easy process. And Godo is a very good, platform, and the best platform to trade with. Tight spread, fast deposit, and fast withdrawals, and and you can see, the educational support being given as well. So invite other traders, to come on board, and don't enjoy this wonderful thing alone. Okay. So Dr. Luke, do you have anything to say before we call it a day?
All right. Thank you guys again. Once more, I say happy Easter to us. I have nothing much to say, but for the I think the holidays, we traders continues with their trades, because tomorrow market will be open.
Next
Uh,
tomorrow. Okay, yeah, tomorrow, yeah, Sunday,
yeah,
yeah,
yeah.
10 p.m.
Tomorrow
Yeah,
market opens.
yeah.
So I just want to tell us, no matter how small you think, or no matter how inexperienced you think you are in trading, I bet you start getting like minds around you. Start getting friends who are traders around you. You know, start growing a community, so that trading is not going to be done alone. Make sure you have five, 5, 6, 7, 10 persons minimum around you who are traders. Whether they are part-time traders or full-time traders, have them around you. It's always good to have people you share ideas with. And imagine when you have such a size, and you bring them to this meeting being provided by Godo. It will do a whole lot of reform, and this such reform will help form your community. So I urge us, don't just come here alone. Try to bring in people. Try to form a group of like-minded individuals. I wish you and your families the best of the Easter break. Thank you.
Thank you very much. Thank you very much, Dr. Luca, for that wonderful note.